Right, look at this exercise. What they're asking. Following transaction have extracted from the Mahela's business for the month of April 2016. Prepare the petty cash book and the relevant record in the ledger accounts. Now see the first day, 1st of April, the float received. We have received from the main cashier for 1,000 rupees. From this 1,000, we have done a lot of payments here. What are the payments? So bus fare, that means traveling. Then the cleaning. Then again, taxi cost mean traveling, cleaning, then the stamp, that is postage, distribution, staff traveling, envelope. Likewise, there has been done a lot of payments. They're asking us to do petty cash book and record them in journal. So we'll draw the format petty cash book. You must remember the table formats, right? Student, you must remember the table formats, right? So this is debit column, that is the receipt side, receipts. So here receipts, receipts, then date, date, then here description, description, then payments, payment column here, payment. Then here I am using some analysis columns. The payments will be analyzed. Analysis column, the payments will be analyzed, right? Right, what are the payments they have made? You have to analyze another given analysis columns. We'll see. Right, so the first receipts 1,000, the date is 1st of April, description cash. You have collected cash. It's not a payment, it's a receipt. The next day, right? So 3rd of April, payment voucher number is given. So if need, you can have a column for the payment voucher number. You can have a column for the payment voucher number if because they have given the payment voucher number. We'll have a column for the payment voucher number. Here I will use payment voucher number. Right. So the first payment is 3rd of April, voucher number 201, paid for to whom the payment has been bus fare. Bus fare, that is how much? The payment is 50 rupees. So here the payment you have to classify. So I'm using a heading for classification, that is traveling. Under the traveling, I'm putting the value here 50 rupees. The next one, 4th of April, 4th of April, that is of cleaning, voucher number 202, 202, value is 20 rupees. So we'll have a heading for cleaning. So you have the payments has must been analyzed, right? Payment has been analyzed. 4th of April done. 5th of April, that is for the taxi cost. Taxi cost 40 rupees. Voucher number 203. So again, the taxi cost is traveling. You must classify under the traveling column. Then 6th of April, cleaning, voucher number 204. Here, cleaning value is 70. Again, we'll classify under the cleaning column. So all the payment you must classify. All the payments you must classify. Then 7th of April, 7th of April. That is for stamp. Voucher number 205. Value is 30 rupees. That is will take under the postage, right? Postage under that 30 rupees stamp. Then 8th of April, distribution cost. Distribution, you will have a voucher number 206. That is coming under the 40 here, under the distribution. We'll have a column for the distribution. Distribution. Then 8th April done. 9th of April, that is for staff traveling. 207. Value is 10 rupees. Here under the traveling will take 10. Then 10th of April, envelopes. It's 208. Value is 60 rupees. Under the postage will take 60. Then 11th April, fuel 209. That is 80 rupees. So we'll take under the traveling. It's fine. The 11th done. 12th April, cleaning 210. 30 rupees. Under the cleaning 30 rupees. 12th April. Then 13th April, we have made a payment for postage 211. Value is 20. Postage, it's 20 here. 13 done. Then 14th April, stationery 212. 60 rupees. We'll have a column for stationery. We don't have a column for stationery. No? Stationery. Here 60 rupees. Then 15th April. 15th April, bus fare 213. Bus fare 213, 50. That's again to travel in. Then 16th April, telegraph 214. Value is 10 rupees. I hope you understood, student, right? Look at it carefully. Telegraph will take it under the postage. Now you can see here, we have received 1,000 from the main cashier. From the 1,000, we have made few payments. This is the total of the payments. These are the total of the payments that has been paid from the petty cash, right? Now we have to get the total here. Total here, that is 570, right? 570. Then you have to balance it. The petty cash book has to be balanced. Then 17th April, you are receiving the cash. 17th April, you are receiving cash. You can see here under the question, they have given 17th April float reimbursed, right? 17th April cash coming in. How much the cash coming in? That is 570, right? That is 570. Why it's 570? The amount spent by the petty cashier will be reimbursed. Remember, very important, the amount spent by the petty cashier will be reimbursed. right? So here I will put a double star and next give you the detail. The amount spent by the petty cashier will be reimbursed. Here in this case, RS 570, right? 570 will be reimbursed. So then you collect 570 from the main cashier. Now we are having 570 plus cash in hand value will be again 1000. Altogether 1000. Here the total 1570. You can take the same here. 1570. Here the gap 1570 minus 570. The gap will be 17th April balance carried down. Balance carried down. Now see, this is the format. You must learn it. Then 18th of April, you may have a balance of here. 18th of April, BBF. BBF mean balance brought forward. Balance brought forward. You have a balance brought forward amount of here 1000. This is carried down. This carried down will be brought forward. This carried down will be brought forward, right? This carried down will be brought forward. So that is balance brought forward. Remember, very important. We have done the journal. Sorry, we have done the journal. Now it's required to do the ledger posting. Now it's required to do the ledger posting. So how many accounts we need? See how many accounts we need. We need here one for the traveling. So you need one account for the traveling. Then number two, need the cleaning. Number three, postage. Number four, distribution. Number five, stationery. Number five, stationery. We need 5 T accounts to post this transaction to the ledger. We'll open 5 T accounts. 5 T accounts. Two, three, four, five. So here we need traveling and transport. Traveling and transport will be debit on 17th April. Petty cash. Petty cash credit. Traveling and transport debit. How much the total value of the traveling and transport came? 230. Then cleaning account. Cleaning account. Debit on 17th April. Petty cash. It's how much? Total came 120. Then postage again 120. Post again 17th April. Petty cash. Again 120. Postage 120. Then distribution cost 40. Distribution cost. Debit on 17th April. Petty cash. Distribution cost. Petty cash 40. Then we need stationery account. The last stationery account. Debit on 17th April. Petty cash. Value is how much? Stationery we are having 60. So easy. Here, finally, I would say there are two transactions. I think you understood, students. You understood, right? So here we're having only two transactions. One is the payments made by the petty cashier. The other one is the reimbursement received from the main cashier. Here we have received two reimbursement. One is the 1,000, that is initial float introduction. The second one is we have received here 570. Then the double entry for reimbursement. Double entry for reimbursement is, right, petty cash account debit. Here initially we have received 1,000. Then the cash account, cash book credit 1,000, cash book credit 1,000. Then the payments made from the petty cash, there are again double entry for that. So petty cash book credit, relevant expense account debit. Relevant, here the relevant expense mean traveling, cleaning, postage, distribution, post stationery. You can see here we have done debit. Relevant expense account debit. Relevant expense account debit. Maybe traveling, maybe cleaning, maybe postage, maybe distribution, maybe stationery. Petty cash account credit. So you must remember the double entry. So by now, I think you understood. We have learned how many journals? 6 journal. Sales return, purchase return, cash booking, and petty cash. Then we look at the last journal, that is number 7, general. General journal, right? So this is the last journal that we are going to learn under the journal chapter, right? So this journal is used to record 5 types of transactions. This journal is used to record 5 types of transaction. I will teach you what are these, right? So here this journal is used to record 5 types of transactions. So first one is opening balances for the new period, new accounting period. Number 2, correction of errors and omissions. Number 3, adjustment entries. Number 4, credit, purchase and credit sales of fixed assets. We have learned the difference between the inventory purchase and sales and the fixed assets. So fixed assets, actually we are not buying for the trading purpose. The fixed assets will be purchased for the usage of the business, right? Remember, fixed asset we are buying for the usage of the business, not for trading purpose. Then the last one, number 5, any other entry which cannot record in other 6 journals, right? If you have any other entry, right? So here sales journal we record the credit sales, purchase journal will record the credit purchases. Both of them are inventory. Then the sales return, purchase return is return of the credit purchase or credit sales inventory. All this journal was talk about the inventory, but this journal, general journal, is the only one that is used to record the credit purchase and credit sales of fixed assets. So fixed assets, as I said earlier, fixed assets we are buying to not for trading purpose, but for the usage. Fixed asset we are buying for the usage. Maybe lorry, maybe building, maybe the motor vehicles, maybe the furniture and fittings, maybe computer equipment, those fixed assets. If you purchase it on credit, better you record under the general journal, right? Here you can say motor vehicle, office equipment, then furniture and fittings, right? Furniture and fittings. Very good. Done. So here I'm not going to play. I'm not covering a paper here, question here because that has not been tested recently. We have a separate chapter for the correction of errors and omission. Under that, we will be learning that chapter. The opening balance, adjustment entry, credit purchase and sale of inventory, fixed asset. Then those things will mostly will not be tested in your paper, right? Very good. So with that, I can finish the journal section. Remember, we have done 7 journals. You must remember what are the transactions that we are going to write in each journal, then what are the source document for each journal, and what are the special transactions that you can't write there. For example, in a cash book or petty cash book, you can't write the credit transaction. The cash book or the petty cash book, you will be used only to record what cash transaction. No credit transaction will be recorded, right? So with that, I'll be finishing the journal section. I need to finish it a little bit fast because only few months left for the O level, right? Then we will look at the another chapter, that is another very important chapter, that is bank reconciliation statement. Very important chapter. Every time there will be a definite question in your paper, right? So the bank reconciliation is very important chapter, right? So we learn today about the bank reconciliation statement. What is a bank reconciliation statement? Just think that in your accounts you will be maintaining what cash book for the bank transaction you have done. You are maintaining cash book or bank account for the transaction that made with the current account, right? This is your business. Just think, this is your business. This is your business, right? Just think you have opened a current account in the commercial bank. This is the bank, right? This is the bank. Bank will say Sampath Bank, right? So just think that initially you have deposited some money, to open a current account. You have deposited some money to open a current account in the commercial bank. Just think that you have deposited 50,000 cash deposited to open a current account. To open a current account. Once you open a current account, so what are the things you will get? Once you open a current account, you will be receiving a checkbook, right? Instead of making a cash payment to any other party or a third party, now you can issue what? Check payments, right? All these people who took the check must visit the bank for collection of the cash. Just think that you have deposited 50,000 to open a current account in the bank, and the bank has given us a checkbook. The bank has given us a checkbook to do the bank transaction. We have received what? Checkbook, right? We have received a book to do the transaction, right? For all the transaction that we made through the bank account, we will be updating in cash book or bank account. Cash book or bank account, right? So the cash balance is an asset for us. Therefore, we will use here the asset principal. The bank balance is an asset for us. The bank balance is an asset for us. Therefore, we will use what? Asset principal to record the transaction in the cash book, right? Here, cash and check deposits. Cash and deposits. What we do? Cash and check deposits will be debit here. Cash and check deposits will be debit here. Why? It's an asset principal. Asset increases. It's based on the asset principal. This is asset account. Asset account. Therefore, the increase will be debit. Decrease will be credited. So you use the asset principal to record the transaction with the bank. All the check payments here will be credited. Check payments will be credited here. Why? The current account balance come down when you are issuing some checks. The current account balance will come down when you are issuing some checks. Just think, at the end of the month, just think that we are looking how much the balance that we are having in our current account. How do you find the easily balance? Deposits minus all the payments, then you can easily identify the balance in my current account. Then just think, as per your record, the balance shown in current account is 5,000. Just think, the balance shown in the current account is 5,000. You are not happy. You are not happy. Just think, here balance is shown in the current account, BBF is 5,000. You think that I have done this more than this transaction, how the balance came 5,000, right? So very important, take it carefully. So we have maintained cash book in our records based on the asset principle. As per the cash book, the balance shown in the cash book is 5,000. I am so confident that I have written all the transaction in my cash book. What are the transaction I wrote there? Cash and the check deposit I have debit here. Then the check payments I have credit here. Finally, I have received a balance of 5,000. Then this balance I will be cross-checking. I will be cross-checking with the bank statement balance. Now see, the bank is sending a letter. That letter contain bank statement. Once you open there, you can see the balance as per the bank record. Once you open there, you can see the balance as per the banking records. So now you can see there is a difference. Why? This is prepared by us. This is prepared by whom? Bank. Bank statement. Bank statements. So just we'll assume this is for the July month. July 25. Right here, our deposit is an asset for us. Our deposit is an asset for us. For the bank, the deposit become what? Liability. Why? If we are going to ask for the withdrawal, they must give us. Then the bank is using which principle? Liability principle. Liability principle. Even though we have used it as a principle, the bank will be using which principle? Liability principle. Here, in this case, here the balance, here credit. Credit means the balance goes up, then the debit. And here you can see the description. Here you can see the description, right? This is the general format of the bank statement. All the deposits here, all the deposits we was debit deposits, and the balance increase in transaction we have debit, but the bank will do opposite of that. That means all the deposits will be credited. Deposits, they are going to credit it, right? The deposits that they are going to credit it. What about the withdrawals? Withdrawals will be debited. Withdrawals will be debited. Withdrawals will be debited, right? Very important. The deposits will be credited. Withdrawals will be debited. Finally, here you can say balance as per bank statement, as per the bank record. Here you can get balance as per at the end of the month. Balance as per bank statement is balance as per bank statement is how much? Whatever the figure. Balance as per bank statement. We'll assume, we'll put a figure here, 3,000. Now we are not happy. Why? As per our records, balance as per the cash book is came 5,000. But as per the bank record, the bank is showing a balance of how much? 3,000. I am not happy. Why? There is a 2,000 short in the bank account. What was the reason? So I must raise then, or now see, balance as per the cash book is not equal to balance as per the bank statement. Therefore, we must prepare what the chapter name, that is the bank reconciliation statement. The summary is balance as per cash book is not equal to balance as per bank statement. Now see, very important point we have come across. Right, as per your records, how much the balance came? 5,000. As per the bank record, how much the balance came? 3,000. Now you can see a difference between these two. Then you need to identify if this is not tally, if this is not balancing, we need to identify what the reasons for the difference. You must identify reasons for the difference, right? You must identify reasons for the difference. Reasons for the difference, right? These reasons may be an error in our cash book, right? Maybe an error in our cash book, errors, or maybe an omission, right? Omission mean we haven't recorded, right? Then first one I said errors, the second one is omission, third one is due to time. First one, we'll take it here, due to errors that can be internal, our cash book error, that can be cash book error, or bank statement error. Both can happen. Both can happen. Cash book error or bank statement error. Bank errors. Then, or else, this difference may be due to omissions. Omissions. That mean in the cash book we have a record. Cash book we have a record. In the cash book, in the cash book, we haven't record. This is called omissions. Example, you can say bank charges. We are not aware about the bank charges until we receive the statement. Bank charges. Then standing order. Payments. These are the example. Then the third one is due to time difference. Due to time difference, there are two due to time difference. Check deposited check deposited but not realized. Number two, check issued but not presented. Check issued but not presented for payment. Right? Very important. See, there are three reasons for the difference. Number one, due to errors. In our cash book, there can be errors, or in our cash book, there can happen some omissions. Right? Omissions means some of the transaction we haven't recorded. Third one is due to time differences. There are two reasons for the time differences. The first one, check deposited but not realized. Second one, check issued but not presented for payments. Right? So we need to identify reasons for the difference. Why? Just see here. As per our record on asset principal, we have noted that we are having a balance of 5,000. But the statement who have prepared by the bank is showing and telling us the bank statement is having 3,000 balance. We are not happy with these two balances. Why? We are having high balance, but the statement shows us smaller balance. Then we need to identify reasons why these balances are not telling. What are the things we have not recorded? What are the things the bank has not recorded? Then we need to identify reasons for the difference. These reasons may be due to an error can have in our side, or due to time differences, or but check deposited, we have deposited, but the realization has not happened. Or check issued, we have given the check, but not check has come to draw V Bank for what? Payments. Right? Very important. We'll see a question directly from the paper. Right, you can see in this question, that is 2020 O level, question number 6.4. Just give me a minute, students. Just give me a minute. Right, we'll see. So this is one of the O-level past paper. So we'll prepare all the cash book and we'll discuss detail. Following are the bank account and the bank statement received from the Bank of the City Malls business for the month of December 2020. The first, what they have given the bank account, who have prepared, the business has prepared the bank account based on the asset principle. This is the bank account. The business has prepared, right, based on the asset principle, right? Business has prepared the bank account. This bank account based on the asset principle. Asset principle mean in the double entry system we have learned increase debit and decrease credit. Uh, This is the double entry system we have applied for the preparation of the bank account. You can see here, date column is there, then the receipt note number, we have learned the format of the cash book, right? Then the description is there, then the amount is there. On the credit side, date, description, and the amount. You can see finally, as per the cash book, we are having a balance of how much? 22,500. As per the cash book, we are having a final balance of 22,500. This is the statement prepared by the bank and sent us. As per the statement, it shows closing balance is how much? 12,500. Closing balance is 12,500. Right? Very important. Right? So you can see it's not it's difference. So who has prepared the statement? The statement is prepared by the bank. What is the principle they have used? Liability principle. Bank statement has prepared by the bank on liability principle. That means increase credit and decrease its debit. This is the principle that they have applied. Now you need to check whether what are the reasons for the difference. First, you need to identify reasons for the difference. Is there any error in the cash book? Is there any error in the bank statement? Is there any omission in the cash book? Or is there any unpresented checks or unrealized checks? Right? This is the third one I said. There are three reasons for the difference. One is error, second one omission, third one is due to time differences, right? Better you might remember all this can be tested, right? So in this paper that was tested. See here, right? What they're asking. Writing reasons for the difference. Now see, writing reasons for the difference between the balance of the bank account and the balance of the bank statement of the City Malls business as at 31st December 2020. They're asking you to write reasons for the difference. Second, they're asking adjust the balance of the cash book. Why? The bank account balance is wrong. Cash book balance is wrong. They're asking you to adjust. That's why it's different. Cash book balance is wrong, then they're asking you to do the adjustments. Adjust the balance of the bank account of the Cinemal's business as at 31st December 2020. So I'll do the full question for your information, right? I will do the full question for your information. So just look at it and put the best effort to understand. Right. Right. First, Our balance is having 20,000. You can see here, as per our record, the balance is 20,000. Then, as per the statement also, the balance is how much? 22,000. No any error, no any issue with the opening balance. Right? Opening balances are, we are having 22,000. The bank is also having 22,000. No any error with the opening balance. Right? Look at, there is a check deposit 15,500. We have done a deposit. This is the check. 711,322. Does it appear in the statement also? Yes, you can see our deposit we have debit, the bank has credited, it's there. So we have done the deposits, it's appearing in the statement as well. See here, it's there. Statement also having no issue with the 15,500. Then the third, there is a cash deposit. There is a cash deposit 25,000. So does it appear in the statement? Yes, cash deposit here 25,000 is there. It's appearing in the statement as well. Right? It's appearing on the statement. See, 25,000 deposit is appearing on the statement. Very important. Right? No any issue with the 25,000. But you can see there is a check deposit on 28th of December, 100, it is not appearing. Now see, this is not appearing. This is one of the reasons for the difference between balance as per the cash book and balance as per the bank statement. Very important. This is one of the reasons for the difference. This is one of the reasons for the difference. Now see, we have done a deposit 12,000. It is not appearing in the statement. We deposited but not appearing mean deposited but not realized. This is one of the reasons for the difference. What is this? This is deposited, check deposited but not realized. This check, this is the check deposited but not realized to the bank account. So this is called deposited but not realized. Very important. This is one of the reasons for the difference. This is time, due to time, timing reason, due to time, right? So the value is deposited but not realized to the bank account. Check number 100. RS is 12,000. Very important. Just look at it, students. Put the best effort to understand. Right? So we have done a 12,000 deposit. It's not appearing in the statement. This is called deposited but not realized. Now the debit checking is we have finished it. Now just go to the credit side. Go to the credit side. We'll identify any reasons for the difference. Right. See on the credit, what are the things? You can see here a 20,000 check issue is there. Does it appear in the statement? Our credit and their debit. Yes, it's appearing on the statement. See here, 20,000 is there. Then 3,000 check deposit issued check is there. Does it appearing in the statement? Yes, this 3,000 is appearing on the statement. 3,000 is appearing on the statement. See here, no problem. Then you can see 24,000 payment is there. Is it appearing? Yes. 24,000 we have done an issue. Is it appearing? Yes, 24,000 is there. Check number. If need, you can cross check the check number as well. Then we have done a 5,000 payment. Now see, it's not appearing. We have done a 5,000 payment. It's not appearing. This is called unpresented checks. This is called what? Unpresented checks. Very important. We have issued, but that has not been presented for payment. So this is called, what is it? Check issued. This is the check issued but not presented for payments, or else you can say unpresented checks. If need, you can write check number 812 304 RS. It's 5,000 check. Very good. Right? So we have cross-checked the cash book, right? All the things were ticked, all the things were circled, it's done. Now, if you go to the statement, there are two payments that has not been ticked. There are two, 2,000 and the 1,000. Those two will be the omissions in the cash book. This is one of the omission in the cash book, and this is another omission in the cash book. Now see, two omissions are there. One is the bank charges, the other one is what? Stand in order. Those are omissions which haven't recorded in the cash book. These two are omissions. Omissions which we haven't record in the cash book. Cash or bank account. Cash book. We'll say cash book. Those are omission that has not been recorded in the cash book, right? Omission that has not been recorded in the cash book. Very important, right? So then here, there are two omissions that has not been recorded in the cash book, mean we can say those are what? Omissions. Therefore, these are omissions. Therefore, that has to be recorded in the cash book, and the cash book balance is wrong due to omissions. Two omissions. Omissions. The given cash book balance. Balance of RS. How much the cash book balance of RS? See how much the cash book balance. 22,500. 22,500 is not correct. Right? Is not correct. Therefore, right, due to two omissions given omissions due to two omissions, right? The cash book balance is due to two omissions. The cash book balance is not correct. Therefore, we must prepare another account called adjusted cash book. Adjusted cash book, right? How do we prepare the adjusted cash book? Just a T account you must prepare. Just a T account. So why we are going to adjust the cash book? Because this balance given 22,500 is wrong. Why it's wrong? They haven't record two transactions. What are the two? Standing order payment 2,000 they haven't record. Bank charges 1,000 they haven't record. Therefore, the given balance 22,500 is incorrect. Therefore, we must do the adjustment to the cash book. Right. We'll adjust it. Right. We'll start with the given balance. Balance brought forward. How much was the given balance? 22,500. 22,500. Right, you take the existing balance, this balance, you are taking the existing balance, this balance to here. You are taking the existing balance, 22,500, it's not correct. We are going to make adjustments. So only two transactions that has not been recorded, all the payments. Therefore, we must credit payments. We must credit stand in order payment 2,000. Then bank charges 1,000. Now we have recorded the two omission transaction and the cash book balance has been adjusted. So here the bigger balance is 22,500. Bring the same here. Then the balance will be adjusted balance carried down. Adjusted balance carried down. Here the gap. How do you find the gap? 22,500 minus 2,000 minus 1,000. Then you find here 19,000. Adjusted balance brought forward. Adjusted balance brought forward comes here 19,500. This is the way you do the adjusted cash book, right? This is the way you do the adjusted cash book. Remember, very important, how to prepare the adjusted cash book. Right, then once you adjust the cash book, you can cross check whether the adjusted cash book balance is equal to the statement balance. How much the adjusted cash book balance came? 12.